Welcome back. We have breaking economic news. New retail sales data for Canada has just been released. The so-called flash estimate for September from StatsCan is that retail sales were unchanged in September. Now, that's a preliminary so-called flash estimate. It is subject to revision. It's the most forward-looking number we have at this point. The other numbers released today are August numbers. Again, StatsCan saying retail sales in September unchanged. According to the flash estimate from Statistics Canada. Now, here are the August numbers. And there you see the Canadian dollar with its reaction, as these numbers are just seconds old now. They were released about 30 seconds ago. Retail sales for August come in line with expectations with a decline of 0.1%. So that's a decline from July to August of 0.1% in the value of retail sales in Canada. Excluding automobiles, which of course are big ticket items, we get a number which is at odds with expectations. Excluding automobiles, retail sales in August grew by 0.1% from July, Economists had been forecasting a decline of 0.1% from July in retail sales in August. Again, StatsCan saying that the September number it expects will be unchanged. Well, we're joined now by Eric Lascelles. He is chief economist at RBC Global Asset Management for his reaction to these numbers. Eric, what do you think? What do you think of that September number? First of all, unchanged retail sales for the month of September.
Right. Thanks, Paul. And so that is where the focus is, since we had a bit of a hint as to those August figures already. And so flat is soft. Let's acknowledge that in an absolute sense, which is economies are broadly meant to grow. And this appears to be one that won't be seeing consumer spending at least grow all that much in September. You tack on the August numbers, which we already had a hint at, but nevertheless confirming that minus 0.1. And maybe to me, the point is just here we are in a world in which inflation is still running at least a little bit higher than normal. Here we are in a Canada in which population growth is running rather considerably higher than normal. You need retail sales growth of something like 0.4, 0.5, 0.6 just to mean that the average Canadian bought as much stuff as the month before. And so as we pretty steadily run below that, including the month before August, it seems to me that this is evidence that Canadian consumers are feeling a bit of pain here and are really not enthusiastically driving the economy forward.
You made the point in some recent notes, and I think you've touched on this as well. Spending growth is not keeping up with inflation. What are the implications for the future path of inflation if spending growth, in your words, is not keeping up with inflation?
Right. Well, I suppose there are a few different ways of taking that. And one would be if we're seeing genuine economic softness in the Canadian economy, that should be a downward pressure on inflation. It might well help to tame it to some extent. I'm aware that some of the forces are not Canada specific. And so I'm not sure that Canadian spenders or the lack thereof can necessarily have an influence on the overall picture. But nevertheless, I suppose that is an argument that Canadian inflation can come down a little more than some. And I would note, just broadening out the thought a little bit, that latest Canadian inflation print was a little better than in the U.S. as an example, and it does seem to me you can say the Canadian economy is maybe sputtering a little bit more than the American economy is right now, and this retail sales data I think is maybe the latest bit of evidence that points in that direction. Is
the version of the number that excludes automobile sales the one that people should really focus on?
I'm torn on that. I mean, we do have a flavor for what auto sales will be in advance, and so you could argue if you're looking for new knowledge and new data, maybe that would be the right answer. But car buying is a significant part of spending, and so I wouldn't want to exclude that too much. I guess it gets rid of a bit of chop in the data, but I think the overall number tells us something of value. And to be honest, to me, a minus 0.1 versus a plus 0.1, those clearly aren't the same thing, and there's a different sign associated with them. But keep in mind, really, what we should be looking for are 0.4s and 0.5s and 0.6s if we really want to ask whether the average Canadian is buying more or buying less than before. And all of these numbers pretty resoundingly are saying the average Canadian is buying less.
I'll just tell you and viewers some of the details. With respect to automobile sales, lower sales in motor vehicles and parts were down by 0.9%, so a fairly meaningful drop, down for the second consecutive month. Lower sales were reported at new car dealers, down 1.1%, again fairly significant. Used car dealers down 0.5%. Other motor vehicle dealers, I'm not sure what other would encompass. We've told you about new cars and used cars. Other motor vehicle dealers saw an increase of 1.1%. As for the setting aside auto sales, core retail sales were led lower by lower sales at food and beverage retailers, down by 1.2%. Again, a fairly significant drop. And to a lesser extent, StatsCan says sporting goods, hobby retailers, musical instrument retailers, book and miscellaneous retailers. Any surprises there, Eric?
I mean, there's just a lot of breadth to the weakness. I'm looking right now through the list, and it's just the number of things I would normally look to that are down is pretty high. And so, as you say, sporting goods sales are down, and clothing sales are down, and furniture sales are down. A lot of things are down. You'll laugh. The biggest plus I can see is cannabis retailers, and so they're up 3.9%. But broadly speaking, a lot of weakness here, including food and beverage retailers. And I did manage to catch a glance at the official real retail sales number, so that's adjusting for inflation, and that was down 0.7%. So as I said, you need a pretty profoundly positive number these days just to get more things. And gosh, if you want to then adjust that across the million extra people in Canada over the last year, you need even more growth than that. So Canadians are behaving more cautiously. To me, that rhymes a little bit with what the Business Outlook survey was saying earlier in the week. And a lot of the survey type data that we're getting right now is pointing to a degree of weakness in Canada.
Is there anything here that would influence the Bank of Canada meaningfully to move the needle on what the Bank of Canada does next week? The view in the swaps market is that there's a very, very slim chance of a Bank of Canada rate increase next week.
Yeah, I think that's right. I mean, if there were to be an action other than holding steady, that action would be up. I would view that as being pretty unlikely at this juncture. I should emphasize we shouldn't overweight retail sales. It matters a lot. Consumers are a big part of the economy. I would note that if August data is the data we're talking about here, we did actually do okay on the wholesale trade and the manufacturing and the international trade. So it's not as though it's been free fall through that August data. But nevertheless, this would incrementally, I guess, reduce the probability of a further move. To me, the bigger one would have been those inflation numbers that came out not too long ago that were also at the margin a little bit softer. And so I think the Bank of Canada probably has the luxury of remaining on hold for the moment. Tiff Macklem has been clear that this isn't necessarily the final word on the subject, but I do believe the bank and indeed central banks in general, very data dependent right now. This particular bit of data would suggest there isn't a lot of urgency to move. The Business Outlook survey, which the Bank of Canada publishes, to me was quite remarkably weak in terms of expected sales, much softer than before. Investment plans, hiring plans, softer. The big question I think everyone has had is to what extent have we already felt the worst of higher rates or not? And I don't think we're even close to having felt that, but that survey indicated that the most popular answer on that question was that the impact of rising interest rates is just beginning. And so I think there's plenty of monetary pain yet to come, whether they hike or not.